Assalamu alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So I want to share with you guys 10 companies that are right now undervalued. But before I get to all of that, I just want to tell you a story that happened in 2020 March. I think it was the 13th of March or whatever the day was, 2020. I went out with a couple of friends. Both of them have a degree, an economics degree. And I remember one of them left, went to the toilet and came back. And we were just having a conversation. And he just said to us, guess what? They just halted the S&P 500. And I remember basically looking at him, are you serious? And he was like, yeah. And to be fair, we didn't do anything. We just carried on our conversation. We went home. And for the last 4 years, we talked about that day. Because that day was the day the stock market hit rock bottom. From there onwards, it went up. Okay. And or maybe the day it dropped to the day it got halted, and then from there onwards, maybe a week or two, it was down, and then it kind of bounced back at the end. Long story short, it basically came back. And the reason I'm telling you that story is because we always said, can you imagine what would have, like, how much we would have made if we actually put all our money into the stock market on that day? And I remember I had a lot of cash at that point because I was in the process of buying my first apartment, and I potentially had closer to 80 to 90,000 pounds basically in my account at that point. So I genuinely think if I had put that money into the market on that day, I would have made at least another 500,000 pounds on top of that. And this week kind of reminds me of that. Last 2 days, the stock market has been absolutely, like, literally is down now 5 to 6% in just the last 2 days. Since the Orange Man has come out and said, I'm going to fight with every single country until they give us what we deserve, blah, blah, blah. And then put this terrorism on everybody's doorstep and just left it there. And now China's biting back. China's now imposing, I don't know, 30-something% on their own tariffs on the US goods and so on. So it's going to be interesting. It's going to be a roller coaster. I'm ready for it. I hope you're ready for it, because I don't want to look back and say, do you remember on the 4th of April, blah, blah, on the 3rd of April, do you remember what happened in 2025? I want to look back in that moment and just say that I made the most of that opportunity. And inshallah, I'm going to continue doing what I've always done, and that's buying high quality businesses. Now, if you look at the fear and greed index, it's 4. I've never seen it like this. Honestly, this is the lowest I've seen in years. And what this basically tells us is the sentiment has sort of shifted, and people are now more worried about investing in the stock market. Not long ago, we were here, extreme greed, and those people have been selling. We are here. Remember what Warren Buffett always said, when others be greedy, when others are fearful. And that's exactly what we need to do. If you're a long-term investor, that's exactly what you should be doing right now. This is the S&P 500 just today. This is the S&P 500 just this week. Companies like Broadcom lost 16% just this week. Qualcomm about 13%. AMD, I own these 3 companies. Okay, 16%, basically 16% for AMD. Nvidia 13% down. Apple 10% down. Every single company is getting hit, apart from some of the consumer defensive stocks. And there's a reason why they call them consumer defensive, because the tariffs, of course, will affect them, but not as much as these companies, the big boys. The big boys that went up so much over the last months and years. Even when you look at the world right now, look at this. It's red everywhere, whether it's in China or Japan or India or Taiwan or anywhere else, Ireland, the UK. The UK is probably like the Unilevers and National Grid and a couple of other companies are doing okay, but the rest of the world is actually red. So the moral of this story is this is normal thing. It does happen, and it happened before. It's going to happen again. And right now what we do is what's basically the most important thing. Right now I'm down about 9,000 pounds just for this week. This at some point, I think it was the 11th of February this year, my portfolio was up if I go to 3 months, I think it was about February 11th, it was up basically what, £124,000. It was trading at that point, right? £124,000. But like, look at it right now, it's 111,000. And guess what? I have actually been adding money. I've got 1,500 to spend today. I'll let you guys know what I do, inshallah. I'll share that with the community at some point. But there you go. That's basically what we need. Basically where we are and where we're heading. So let's now talk about these 10 companies that we came here for. I'm going to give you a brief information about each one of these companies. All of them are trading under their intrinsic values according to Morningstar valuation. I'm going to give you basically just the basics, and then you're going to have to go away and do a little bit more research. I've got a couple of more videos planned, inshallah, that I want to share with you guys. The first one is Nvidia. Nvidia is one of those companies that have gone up so much, right? Basically, that's not what it is, because when I did the video, planning with the video yesterday, it was trading around this much, but right now it's slightly lower, so it doesn't really matter too much. But what matters to us is the fact that it's actually undervalued right now, or basically has upside of 37%. Now, when we talk about Nvidia, we're talking about one of the best companies out there in terms of moving forward, in terms of the world of AI and everything else. And if you're expecting basically this type of growth for the next, look at how many analysts are looking at this company, right? And if you just focus on the next 3 years, you can basically 51% up to, remember, stock prices basically follow the earnings. If the earnings is going up, the stock prices will go up as well. I'm not saying it's going to go as much, but of course it will go up with it if basically things continue the way they have been, right? Now the danger is if basically things don't really plan out as they were, and you might get half of this, you're still up 25% or more, which is absolutely fine. And look at in terms of revenue side of things, we're expecting about over 200 billion basically this year. Next year, 252 billion. The next, so it's growing about 50 billion basically a year in terms of revenue side of things. So absolutely nothing to worry about. And right now it's about 37% upside from where we are. If we look at, for example, Seeking Alpha, basically was they saying it's a strong buy, and you got 45 strong buys there, and they're saying about 82% upside from where we are. So $171 per share is where they think the price should be, according to Seeking Morningstar, which I prefer is 170. Now the next company I want to share with you guys today is Broadcom. Broadcom is another company that has, you know, basically done really well over the last whatever years, and right now look at it, 41% upside from where we are. $200 per share is where they think the price should be. Right now is $142 per share. For this company, the earnings expectation is about 35 basically percent this year in EPS, and then about 20% following year, 15% following year, and then look at it in terms of revenue. So high double digits, but again, it's trading slightly lower. Now, if we look at the ratings from Morningstar, again, another strong buy, 28 strong buys, 7 buys, and then 5 holds. And look at it, 76% upside from where we are. 204, let's call it 250 is basically where they think the price should be. Right now is 140, which is absolutely crazy. The next one that we're looking at today, you might be thinking right now, you might as well just buy the basically the ETF that tracks the semiconductor companies, because the next one is AMD. AMD is another company that I genuinely think, by the way, this has a narrow economic mode. It does not have a wide mode. But yeah, there's another company that I genuinely like. I own it in my portfolio, and as you can see here right now, in terms of basically Morningstar valuation, is 63% upside from where we are, which is absolutely ridiculous when you look at this company. $140 per share is where they think the price should be. Right now is $85 per share. Now, in terms of earnings expectations, as you can see here, we've got 41% upside from where we're basically year-over-year growth this year, 33% the following year, 21% the following year, and then in terms of revenue side of things, 23%, 20%, and then 15% for the next 3 years. Again, nothing to worry about. Is a buy right now according to these guys, 25 strong buys, and as you can see, 73% upside from where we are. 146 is basically where they think the price should be. Right now we're looking at about $85 per share. Okay, you can read the rest of that information. I just want to focus on the undervaluation side of things. Next one is Salesforce, another one that I own in my portfolio. 30% upside from where we are. $315 per share is where they think the price should be. Right now we're looking at about $243 per share. Now, with regards to earnings expectations, basically we're expecting about 10%, 12%, 15% in the next 3 years. Again, 8%, 9%, 10%, nothing huge, nothing too basically fancy, or nothing to worry about in terms of earnings expectations and so on. And basically we got 25 strong buys, 10 buys, 12 holds, and 1 sell. And right now it's about 55% upside from where we are. $375 per share is where they think the price should be. Right now we're looking about $240. That's the fourth company. If you haven't liked the video, please do so. Share it with your family and friends and everybody around you. Okay, the next one is another semiconductor companies. These companies have been hit hard, honestly, and they are high quality businesses. Check this out, 85% upside from where we are. $147 per share is where they think the price should be. $273 per is basically where they think the price should be in the basically, and right now it's 147. And with price side of things, with the earnings side of things, we're looking at about 28%, almost 29%. And then it's 18% the following year. When we look at the revenue side of it, 27%, 20%, 19%, and so on for the next 3 years. And check this out. Look at the ratings here. Strong buy from Seeking Alpha Analyst, for example. Wall Street is exactly the same quantities, all the same basically right now. And we've got 13 strong buys, 3 buys, 1 hold. And that's 70, almost to 70% upside from where we are right now. $247 per share is where they think the price should be. Right now is 100. That's basically 100, basically more than where it is right now, which is absolutely crazy. The next one we're looking at, again, like I said to you, you might be thinking, why is this guy talking about and all these semis? And it is because a lot of the semiconductor companies have actually come down quite a bit. And again, I'm not saying they hit the bottom yet, but you can continue to do that. But look at this, 45% upside from where we are. $880 per share is where they think the price should be. Right now it's about $600 per share. Now with earnings expectations, we got 32%, almost 20%, another 20% for the next 3 years. With revenue side of it, almost 22%, 11%, another 10, 11%, another 10, 11% for every single year for the following coming years. Ratings, we're looking at basically right now a buy, 20 strong buys, 8 buys, 10 holds, and 1 strong sell. And we've got 56% upside from where we are. $944 per share is where they think the price should be. Right now is about $600 per share. Now, another great company that I own in my portfolio, but the next one is Uber. Uber is basically 22% upside from where we are. Basically right now, one of the things that that's happening to Uber right now in terms of growth expectations is a negative EPS next year. Revenue is expected to grow about 14%. If we go into Seeking Alpha and check this out, so this year there's basically a decline, but the following year we're expecting about 37%, 24%, 20%, another 22%, and so on. There's a lot of analysts looking at this company, and then same revenues about 14%, 14%, 14% for the list for the next 3 years. So nothing to worry about. Right now 22%. So if you're looking for high quality company that's, you know, has absolutely amazing free cash flow, a lot of these companies, when you check this out, they have excellent free cash flow. In terms of return on invested capital is really good, apart from AMD, which is still on the basically still relatively profitable business, if you like, but everything else basically takes, apart from, you know, just the valuation for the EPS for Uber right now. The next one we're looking at is a company that I'm really interested in, and this is ServiceNow. Very similar to Salesforce, but I really like both businesses. This one is 36% upside from where we are. Great company, excellent free cash flows, all of that stuff. $990 per share is where they think price should be. Right now we're looking about, you know, $730 per share. By the way, with Uber, expectations is, look at this, strong buy from Quant, and Wall Street is actually saying is a buy. And you can see that we got 34 strong buys, 13 buys, and 8 holds, and their price is about 38% upside from where we are. $89 per share is where they think the price should be. Right now it's in the 60s. The next company I wanted to show you guys is this one here. So if we go to earnings expectations moving forward for ServiceNow, you can see 17, 18%, you know, and then 21%, 22%, 23% for the next 3 years. And then when it comes to revenue, almost 19% or 20%, another 20% or so on. Absolutely amazing company. I genuinely like the business. I'm going to do a little bit more research in the next few weeks and see where we are. Strong buy, we've got 27 strong buys, 12 buys, and 5 holds, and you can see 53% upside from where we are. $1,118 per share is where they think the price should be. We're almost there. If you haven't pressed that like button already, please do so. It really helps the channel, of course. And then we got on holding. This is a bit of a speculation. The next two companies I'll show you both of them. You just have to be careful with these two here because of basically their products. They rely on basically getting stuff from China, Taiwan, and other places. So you have to be careful, because I think they probably will go lower. Okay, that's just my opinion. So we just have to be mindful of that, because a lot of their products, all the products that they got, all these sneakers and whatever clothes that they make are made in the Far East. So you're going to have to be careful with that. But right now, both of them are undervalued according to this. If we go on here and just type on, okay, I just want to show you a couple of things. Ratings, we're saying strong buy, 18 strong, buy. We got 18 strong buys. And then basically with the price is $65 per share is where they think the price should be. Right now, why is this not loading up? Here we go. And 70th, basically 2% upside from where we are. If we look at the earnings expectations from this company, it's decent this year, but the next year with 35%, and then 25% almost there, 26% after the year after that, 33%, 24%, 20%. So really good company. I really like this one. It was basically on my watch list for quite some time, but now I have to be careful because of what is happening in the rest of basically, especially with what's happening with Nike and so on. We all seen what's happening with Nike right now. So let's go and check out Lululemon, again another company that could potentially be hit with this tariff situation that's ongoing, but expected to do well overall in terms of earnings expectations, and in terms of revenue side of it, it's okay. It's not basically amazing, but it is there at least. And yeah, basically very mixed in terms of the expectations moving forward, but it's about 50% upside from where we are. $358 per share is where they think the price should be. So that's the 10 companies I wanted to share with you guys. I've got a few more videos planned for us, InshaAllah. And yeah, if you like the video, that will be absolutely amazing. And finally, Sharia compliance side of things, you can pause the video. By the way, if you're interested to find out more information, just go to this standards and learn more about it, because I've been getting loads of information. How is so and so not Sharia compliant, or how is this compliant? Just go to here, because Zoya Sharia compliant, they don't just make stuff up. They comes from these standards, and I've read every single page. It's a long page, basically documents, but at least you will understand why there's certain things. And also Zoya's now got like a different, I don't have any affiliation or anything by I can't even talk today. By the way, I don't actually have anything to do with them, but now you've got like a drop down list where you can actually change the standards and basically to give yourself a little bit more options if you like. But yeah, that's basically the Sharia compliance side of things. Nothing to worry about with any of these companies. If you like this type of content, like the video, subscribe to the channel, and I will actually put the link again for the Discord. It's free right now, and a lot of brothers have been joining, but somehow the link was not working for the last 24 hours. I'll put it again, inshallah. If you can join us there and join the brothers and sisters who are sharing good practices, that would be absolutely amazing. You can probably will gain something from it, and I'm not charging anybody, so don't basically join the Patreon account please yet, until I'm ready to come back fully to actually put a lot more stuff, because I don't want you to pay for the Patreon account when I'm not posting regularly. So yeah, anyway, I'm going to stop the video here. Have a wonderful day. Assalamu alaikum.